Very good afternoon, good morning, welcome to the session. Good morning, Mark, Ram, Suk, TM. Hey, Ryan, good to see you. Okay, yeah, morning, everyone. Okay, so let's just summarize what we're looking at today. Remember, as we go into the session, we're looking at understanding what the fundamental bias is, what the near-term sentiment bias is. Yeah, it was a choppy day yesterday, TM. Euro dollar was there. We'll look at euro dollar. I managed to get like one trade out of it. We want to understand the fundamentals, the broad macro outlook, the near-term sentiment to create a trading opportunity. And that's what we're looking for. That's what we focus on in these sessions. And today is a really important kind of trading lesson, because what you have on a non-farm payroll day, this was postponed from the Bureau of Labor Statistics, postponed release due to the US government shutdown on the funding issues from last week. And the market will often go into a state of just sort of narrow ranges in anticipation of the actual headline. So on a day like this, what you want to do is you want to wait for the headline release, and then we can look at trading opportunities. So what we're doing now is preparing for later, essentially. So I haven't got any like trades on. There's no trades that I'm looking for because I know it's all going to change when we get the NFP print. Remember, I'm just going to check that my thing's being recorded. Yeah, it's being recorded.
And
Remember,
ratings
the Federal Reserve, right, has a twin mandate. They want to see stable prices and maximum employment. So as long as inflation is coming down, and as long as the labor market remains resilient, okay, that's the sort of sweet spot for the Federal Reserve. Now, using our tools here, we can see what the expectations are going into the Federal Reserve meeting on March the 18th. As it currently stands, markets see nearly 3 interest rate cuts coming, right, for this year. And that's sort of upped, from about two. So we're now edging towards 3 interest rate cuts expected this year. So what markets are going to be looking at? They're going to be looking at the jobs print to think, well, does this make the Federal Reserve more or less likely to cut interest rates? A very weak reading will mean interest rate cuts are more likely, and we'll see dollar downside, and that will give us an upside in the euro dollar, right? So that's the good news. And I'll show you the levels to look at. The second thing to be looking at is if we see a very strong jobs print, that means the Federal Reserve will be less likely to cut interest rates. So we'll see dollar strength, and that will give us euro dollar downside, right? So that's basically the playbook. Now, a very strong print for jobs or a very weak print for jobs would likely drag equities lower. So it's much harder to see where equity is going to go today than it is where we're going to see the dollar go today. Labor market, if we look at it, right, and you can just go along to trading economics, right, and just have a look at the labor metrics and just have a look, what you've got. ADP employment change. You can see, okay, look, there's a cooling in the private jobs market. Look at the job openings. You can see, oh, look, there's a cooling in the jobs openings. Look at the jobless claims, initial jobless claims, still resilient. Yes, there was a spike higher for the latest print, but still, look, that's not a panic market. Continuous jobless claims, initial jobless claims, where is it? Continuing here, continuous jobless claims. Here we go. That's falling. That's good. That's a robust labor market. So what we're seeing is that the US labor market is cooling, but it's not dropping off a cliff. And the Federal Reserve in their last interest rate meeting sort of expressed a little bit more confidence that the jobs market is a bit better. Now, this print, there is expectations that we're going to see a weaker than anticipated number. Now, that's because Kevin Hassett was making some comments on Monday this week, sort of, what did he, let's see if I can find it here. He was basically saying that, we expect weaker jobs numbers, right, coming out for this print. So that's what we're expecting. And the whisper number, right, is, what's it coming down? Let me just check this, to about 37,000. So like the whisper number is that actually this is going to be a weak print, about 37,000. right? And Kevin Hassett, I think, was telling markets not to panic if we have a weaker print. So the bias is already to see a little bit of a weaker print. And if you look at the way the dollar's been reacting, right, we've seen that the dollar has kind of, been playing into that narrative. Although a lot of that was on, is it the headline that Chinese banks were being told to curb their purchase of US treasuries, right? But either way, what you can start to see here now is that dollar weakness is creeping in as we head into the non-farm payroll print because we're expecting a weaker number. Nevertheless, right, this is what to look for. So in terms of the print, we want to go in and we want to have a look using our economic calendar, right? What's the expected? And the thing to focus on is the low and the high expectations. And what we want to see is we want to see all of these metrics pointing in the same direction. So the year on year, for buying the euro dollar, this is what we want to see. We want to see the year on year coming in 3.5% or lower. We want to see the non-farm payrolls coming in about 10 or 15,000 or lower, right? Towards the low end of consensus. You can be a bit more forgiving in a non-farm payroll print if you just get it towards the lower end or the high end. That's often enough for a trade because of this is arguably the most important data point in the whole world, how the US jobs market is doing. It's the engine behind the global's workforce, right? So it's just everyone's focused on it. Then the unemployment rate, right? If that comes in at say 4.5% or higher, the prior's unrevised, nice, Stephen, unrevised or revised higher, right? Right. So if you see unrevised or revised in line with the headline. So in other words, sorry for the confusion, we want to see average earnings 3.5% or lower, non-farm payrolls 10, 15,000 or lower, unemployment rate 4.5% or higher. If we see that, then we're looking at euro dollar upside. And this is the way to look at it, right? So you've got the time price opportunity on the week, right? You've got a value area high from last week coming up. But what I'd be looking at is just this, right, very clear opportunity, bull flag pattern here. So be looking at a breakout from the highs, right, up to a target here. So the target will be up there. Right, stops, other side of this pattern. But really what you're looking for is this, is just that, right? 4 or 5 point stop at the top, right? See if you can get up in on that. Basically a sort of 15, 17 to risk reward, right? 17 to 1. That's what you're looking for. Now, yesterday, we'll just cover that while we're here. Remember, we were looking at a liquidity hunt at that 1.8, where was it? 1.1899, big round number. So we saw price moved in. We moved up there 20 points, took 50% left at break even, right? Just had one pop at that yesterday. On that weaker US retail sales. Okay, slight weakness in the US retail sales gave the preference for dollar weakness, right? So nice area, got pulled in on the retail sales and held that, right? 20 points. Okay, fine. Get rid of that. Any longs that are still being held from earlier, they can continue to be, I would say you probably would have been stopped out there on the pullback. And if you are still in, just keep trailing it underneath this structure. Otherwise, for now, I'm going to take that off because I think I'm not in the euro dollar long anymore. So now onto the fresh kind of template and then looking 4 or 5 points to the upside. That will be the area there. Now, the other option is if we saw like very weak jobs, you could also look for a dollar yen downside. So this will be the same expression. And what we'll be looking for here, you've got a value area low on the weekly. We're looking for a breakout retest on we go. So it'll be this area here, the 152, the 153 area. That would be kind of the area to be looking at. So we break out, pull back, and then go with it based on this value area low here that we're breaking on the week. Okay. Obviously, if you got up to the value area low here, that would be an even better area, but unlikely to get anything up there. Okay. Yesterday, we're looking at shorting the dollar yen. You can see we're looking for a move up to that region, and we didn't get a move. Price just continues moving lower. Okay, so I'll take that off. That was what we were looking at yesterday. So today, weak jobs. The yen is strengthening, so expect more dollar yen downside. Now, the other alternative is if we see very strong jobs, and that would be dollar strength. Now that's because the market's been pricing in this weak number, that would be the better opportunity for a scalp. So if the average earnings come in 3.8% or higher, if you have non-farm payrolls coming in 125,000 or higher, and if you see the unemployment rate coming in at 4.4% or lower, right? And the priors are unrevised or revised in line with the headline, make sure you get that, right? It's got to be revised in line with the headline. What you'd be looking for is euro dollar selling, right? And that'll be a sell-up market, and you just be expecting the market to go all the way back down, right, to the recent lows. So it'd be sell at market and trying to target 1.1800 and then maybe even 1.1750. Okay, the kind of you could probably trade it as a failed flag pattern, right? So it'd be like that, just 5-point stop. That would be the way to do it from there. So this is the kind of range that I'll be playing. Now, I will not be entering this before the non-farm payroll print. Okay, this would only be after the NFP print. These would be the areas, right? Because you're going to get triggered in based on the headline. So that's what I'm looking for. I'm going to give you this in the chat, folks. Let me just check that. So in the chat there's what I'm looking for. Strong jobs, euro dollar downside, weak jobs, euro dollar upside, and dollar yen downside, right? So I'll just put that in the chat so you can have a look and see what I've said again, right? That gives you the outside. Just a couple of things to note. One, always don't just look at the headline, look at the revision. So what I mean by that is if this comes in, say this comes in like 3.8%, you think, oh, it's a hot print, but the prior is then revised low to 3.4%. The revision offsets the headline, right? And then that can change the market reaction. Similarly, if say this headline comes in, oh, 15,000, but then the prior is revised up to 125,000, the prior undoes the headline. So you've got to make sure that the headline and the previous are in line, right? That they're matching, all right? So make sure that. Sorry. Gold, right? Dollar weakness should support gold upside. So in other words, if you get a very weak print, expect gold upside, gold breakouts. Again, gold is in a nice kind of area for a breakout. Look at this. This is basically nice triangle pattern. So what you're looking at here is potential breakout. So a very weak print, right? Go with the breakout, and then you'd be looking. The target would be there up to the 5,230. Look at the implied volatility levels for good turning points. The gold, just check out turning points. Right, the 5,271. So any upside target, be careful of getting through 5,271. Euro dollar, again, to the upside, it's 1.2027 or 1.2090. Yeah, Mark points out a nice point here with gold, that sort of rising wedge, right? See prices moving up in this wedge pattern. So you can see, now if you look at this on the daily chart, like another way of seeing this is like you got Harami inside bar, right? Inside bar. So that's almost like a coiling pattern. And what Mark points out very helpfully is when the market compresses, right, it then springs. And often that compression happens before the data release, and it can kind of spring either way. What you're looking at here is if you are intraday trading, is you're looking at obviously this pattern, right? Retest like that. So you get the idea. So breakout, retest, out, retest, right? So then that means that your kind of high risk, low reward entries become this $7 stop and that. I think you could probably get away with it there. Right. So that's the kind of thing to look for. Okay, folks. Important points. Number one, do not get sucked into trades now. Do not wait. Don't get sucked into breakouts now. Just wait. Then when you get the release, that's the time to act. Okay, so preserve capital on a day like this. And what markets do? They just wait. And then we'll get the moves. And they're the things to look for. Gold to the upside, looking at that. And then looking at flag patterns, right? If you get the breakout, then you can look for flags breaking to the upside. Euro dollar. We're looking at, we've got a potential flag to the upside. Great. And that can give us a run up to that 1,230. And now that was the the implied volatility level, 1.2027. So that just helps us with that. Target is perfect, just underneath the implied volatility level, right? And again with dollar yen, let's just have a look what the TPO is on the oh yeah, it's all obvious. It's just here. So that's like the perfect breakout area for the week, right? Above that developing value area high, and it will be the same. So folks, I hope that helps. That's really that's the thing to do today at 1:30. Just trying to think if there's anything else. There isn't, you know. That just kind of eclipses everything else. Just have a quick look to see if there's any other sentiment out there that we're missing. Okay, Aussie's gaining on Hauser saying inflation's too high. So, okay, so that means anything weak dollar, Aussie US dollar would be a good pair as well, right? Yeah. Yeah, so that's the only thing. So euro dollar upside would be good and Aussie US dollar would be upside would be good. And also if you just look at this technically, what you can see, the Aussie US dollar here is trying to be a 3 inside bar up pattern. So in other words, very weak jobs print, you could buy at market and stops just underneath low and then close it after the second day. I wouldn't do that because I don't like to take that amount of risk. But then what you'd be looking at is you're looking at wedge patterns. You're not wedge pattern. You're looking at flag patterns. So it'd be like this, right? You see that's nice. Then what you'd be looking for is to go with the breakout on weak jobs. Go with the break. Yeah, nice Nadjam. Nadjam is our flag man, by the way. So when Nadjam flags a flag, you pay attention. 4 hours. Oh yeah, look at that nice break already of a flag of that. Aha, you know, look at it's just flag on flags here. That's a really nice example of a flag. And so there's a flag sort of underway in the Aussie US dollar here that Nadjam's pointing out. So this is very bullish. You can see there's this strong flag here on the 4 hour breaking out. There's also another minor flag that broke out there, right? So just you see the way that the flag's a nice way of managing your risk all along, right? And here we've got another, basically it's an intraday flag that I'm highlighting here, right? 5-point stop and go with that. Yeah, nice work, Nadjam. And Nadjam's basically flagged up, for want of a better word, a series of raising flags. This is a, oh no, sorry. And then you see that, so that's, in other words, tell you that's the way to keep looking at it. Keep looking for these flags. And then we've got a 3 inside bar up pattern here that's trying to form. Now that will be a false break. Obviously, if we get a very strong dollar, that'll be a false break. So again, don't get sucked in early. Folks, that's it for now. I look forward to seeing you. Yeah, cheers, Ryan. I look forward to seeing you later. Yeah, see you, folks. Bye for now.